impact. We've got Gurmeet Chadha joining in on the show right now. Gurmeet, a reform moment clearly for India right now, this pre-Diwali Dhamaka that the government has given us. Do you think the market would also see that Dhamaka? Because the market has been lying quiet for the longest time now. We've had such a range-bound index and stocks as well at our hands.
Absolutely, Aisha. And I think very good morning to everyone. And I think, it was much needed. I think it also, what I also liked was the urgency. The 2-day meeting technically decided everything in the 1 day. Sends a strong message on urgency. Secondly, a lot of similar items are now would not be taxed differently. Something as simple as bread, something as simple as, let's say, pizza, paneer, a lot of things. There was anomaly. Also, they tried to, address the inverted duty structure. So, for example, all the auto components, for example, now they have this, HS code. So that also will be taxed, at the same level. So what we are also going to see, along with obviously consumption boost, demand boost, and growth pickup, is lesser disputes, more compliance, and which is much needed for any robust tax system to do well. And I think it also has a positive impact on the CPI basket, almost 20% of the CPI basket, because your essentials, groceries, everything go down, medicines go down. That has an impact. So you have lower inflation, you have higher demand, higher growth, you have a festive season coming. In my view, this will negate some of the tariff impact the economy is facing. And also, I think the sentiment, it's just that across, the sentiment has been very, very negative. It's not the actual impact, but just the sentiment. So I think it will revive a lot of that as well.
Right. And Gurmeet, hi, morning, listening. Also joining in, what is sense on the entire auto pack? Because while the street is cheering this 5% figure for EVs, you also have a slightly larger passenger vehicles that have now edged towards that 40% slab. Overall, net, how could this play out for the entire auto segment?
No, I think it is pretty positive. Even if you look at 1500cc and above, if you add compensation cess and GST and I think some calamity charge, the actual impact used to be, 42 to 47, 48%, in some cases actually more than 50% at the very upper end. And now you have clarity that it is 40%. So I don't think so it's incrementally negative. You obviously have to go stock wise now. So something like, for example, two-wheelers, it is extremely positive. And I think that was being seen in the price action. Just look at the price action in a TVS, some of the others, even something like an Ola Electric after it announced its own fuel cell ecosystem. Similarly, for auto components, you see Uno Minda made a new high, Lumax made a new high. So companies who had a larger share of two-wheeler portfolio already started reflecting that. So I think two-wheelers are clear beneficiaries. Something like an M&M also gains almost 55-60% portfolio, less than 1500cc, tractors, three-wheelers, low-end LCVs. I think all benefits, almost 60% portfolio benefits. And I think the stock has been doing very well. If you look at the month-on-month numbers, they're reflected on the screen also right now. And I think even something like a Maruti, for example, hasn't done anything since probably 5-6 years, and now suddenly gets a bit of a fill with new launches. So I think for auto sector, it's much needed. It's almost 25% of our manufacturing. India is also one of the global hub as far as auto components are concerned. Ukraine was the second biggest auto component market in non-EV parts. That has undergone a lot of damage. So I think India really benefits, and I think in terms of demand, job creation, and I'm extremely happy there. And I think the fall in percentage drop, if you see from 28 to 18, is the highest. The other one is essentials, where it goes down from 18 to 5. So I think FMCG auto clearly are two big winners in this.
Gurmeet, we don't have much time. Are you buying any of those today?
In autos, Aisha, sorry, I missed it.
Yes, all the sectors that you just talked about. Are you buying any stocks or cars?
So I think car, I would wait for the actual price to come down. But what we are adding is we will be adding more M&M. We will be adding some more two-wheeler ancillaries like Uno Minda. We will add some cement stocks in our basket. We are also looking at, I think the bigger beneficiary will also be financials, because more money in the hands of people not only drive of spending, it also drives, investments and savings. So I think some of the capital market players and NBFCs and banks are also big beneficiaries, because any revival in demand, any revival in capex in future, any revival in economic activity will eventually get reflected in financials as well. So I think that sector, in my view, is also the most value part of the index. Look at, for example, the entire bank nifty available at about 17, 18 times earning, maybe lesser if you add more PSUs. On price to book basis, on everything, if you see, they're lower than their 10-year median, even if you pick the flagship, private banks. So I think that's another pocket which, in my view, is not showing as much traction, but should be a beneficiary eventually. So that offers value as well. So I think broadly, we would now want, more cash to be deployed. If somebody has 100 rupees, I think probably 40, 50 rupees can go in over the next couple of days, and the balance over the next maybe 2 to 3 weeks.
Absolutely. Okay, Gurmeet, great to have you on the show. Sunil, we'll let you go as well on that note. Well, we will get back